Let's get more on the markets from Mike Vinokur, portfolio manager at MV Wealth Partners with IA Private Wealth. Great to see you.
Great to be back.
Another huge energy merger in the States. What does that tell you?
I think that this is the time of the cycle where CEOs look at what they've got, how they can grow, and they evaluate their currency, that being their stock price, and saying, you know, maybe I can be opportunistic before everyone else gets on the bandwagon of trying to acquire. So I'm not surprised, and in fact, I think that over the next year or two, we're going to see a lot more of those deals.
You are waiting, though, for a pullback or a correction in the markets broadly?
In broader markets, we are expecting a correction. We started selling late last week just to raise a little bit of cash. We sold a little bit today. And if certain securities hit targets, we're going to continue selling. Our charts and our indicators are showing that markets are probably close to topping out. We don't know for sure. But we're happy to raise a little bit of cash and wait for a better seasonal point of the year entry, which will come, in our view, over the next 3 to 4 weeks.
And particularly in the U.S. market, which has surged from October, you think the breadth is just not good enough?
Oh, it's terrible. You've got NVIDIA, you've got Meta Platforms, Alphabet, you've got the semiconductor stocks now. But it's not the broad market. It's a less narrow set of stocks than it was before, but not as broad as we'd like it to see. Though, however, today, as I was coming into the studio, I saw that the Russell 2000 was actually picking up from where the S&P 500 was sort of leaving off. So maybe we're going to see a bit of a rotation into small caps out of the larger caps. So we'll see how that plays out.
This is interesting. Historically, mid-February can be a peak for U.S. equities?
Yeah. Typically. It doesn't always happen,
no.
But, you know, you get into the euphoria of, okay, we're done with tax loss selling season in December, Santa Claus rally, this year will be better than the last, RSP money comes in, 401k money comes in, earnings reports come in, they're better than what the analysts thought they would be, everybody gets excited, and you have a lift. And then February tends to roll around, and where's the news? Where's the euphoria? Where's the excitement going to come from? And so typically you see people saying, okay, you know, maybe I need to rotate, maybe I need to raise some cash, or maybe there's some geopolitical news that comes in and scares the weak hands, the people that just bought in, expecting the market to go much higher, and whoop, there's a bit of a correction.
You have some names that you think look attractive. Enbridge, the yield almost 8%.
Yeah. Enbridge reported last week. We thought it was a fabulous report. It's a duopoly in Canada, pretty much. It's one of the, people don't know, I think, but over the last 10 or 15 years, Enbridge has made a lot of acquisitions. And so not only are they one of the largest infrastructure energy operators in Canada, they're huge in the United States. And they've got a mix of pipelines and renewable energy and all kinds of middle infrastructure businesses. Yes, the balance sheet is a little bit levered, but this is like the, you know, playing the house at the casino. The house always wins. It's a duopoly. We need what they've got, and they're going to continue making money. And by the way, you just got a dividend bump yet again, and they guided to a much better distributable cash flow per share number than we were even expecting.
Capital Power, the electric producer, you think this one's attractive too?
Yeah, so this one fell from $50-odd down to, I think it's trading at 36 and change today. We bought it in and around this range late last year. They made a couple of acquisitions over the last, I'd say, 3 to 6 months. It's a utility. They've expanded in the U.S. You're getting a wonderful dividend. I think the dividend yield at this price is somewhere in the 6.5 range. They've come out and said that they plan to raise the dividend by 6% at least over the next couple of years. You've got a great balance sheet. You've got a lot of free cash flow, and we think there's a lot of margin of safety at this price.
Generally, are you seeing opportunities in the energy space? We talked about these huge U.S. mergers.
Yes. So we like the energy space for a couple of reasons. One, it's really cheap. Two, we don't need oil, specifically oil. Gas is really low these days, but oil to go up a lot more than here. In fact, we'd be happy if the price of oil stayed right where it is, because the producers that we own are extremely profitable and very cash flow positive at these prices. But right now, we're in the period of seasonal strength. And before the break, or during the break, you showed the WTI price chart. And if you notice from, say, November, December up until now, oil has had a very nice basing period, right? And we're coming into the point of the year where refiners are going to have to start producing summer driving season gasoline, because summer is only, 90 days away or so, ish. And so we think that the seasonal period of strength is going to increase demand for the commodity, which will hopefully increase the price and, generally speaking, the demand for those stocks.
Can you tell us an energy-producing stock that you hold right now?
Absolutely. We love Cenovus. We like Whitecap. We own a little bit of Surge Energy, Freehold Royalties, which is a royalty company, much less risk than owning the actual energy producer. I believe CP Rail owns, the pension plan owns like 27% of that one, pays great dividends. All of these companies have bigger cash flows, have been raising their dividends. Vermilion's another one that we own a small piece in. So, you know, there's a lot of opportunities in the oil patch. We're looking for growth. We're looking for balance sheet, dividend growth, and ability to buy back stock.